Good morning, traders, and welcome to BCI's morning market analysis. First up, let's talk about the US dollar. The DXY extended its decline for a fourth straight session, falling to 95.58, which is the lowest level since February 2022. Markets are positioning ahead of the Federal Reserve's policy decision, where rates are widely expected to remain unchanged. Concerns around the Fed's independence have become a key overhang, especially with speculation that President Trump could announce a new, more moderate Fed chair earlier than expected. Adding to the pressure are renewed government shutdown risks as Democratic leaders have threatened to block $1.2 trillion funding package if it includes additional homeland security spending. This has fed into the broader sell America sentiment. The dollar has also been weighed down by foreign trade concerns and speculation around possible US Japan coordination to stabilize Japanese bonds and support the yen. Technically, the index is sitting near a key support zone with support around 95.14 and resistance around 96.22. Next up, let's have a look at WTI crude oil. Prices rebounded roughly 2%, trading around 62.5 after a sharp supply disruption in the US. Severe winter storms knocked out as much as 2 million barrels per day, or around 15% of national production. While refinery disruptions along the Gulf Coast raised concerns over short-term fuel availability. Geopolitical risks are also back in focus, with tensions escalating following the deployment of a US aircraft carrier to the Middle East. These supply side risks are being partially offset by expectations of increased output from Kazakhstan as production at the Tengiz field resumes and the CPC pipeline returns to full capacity. OPEC is also expected to maintain current output levels. Key levels to watch remain around the $60 mark as support and $63 as the major resistance zone. Next up, let's have a look at gold. Prices delivered another explosive move, breaking decisively above the $5,000 mark and reaching a fresh record high near 51.88 before consolidating around 51.70. Gold is now up approximately 20% year to date, continuing the strong momentum that carried through the end of 2025. The rally is being driven by a combination of heightened geopolitical risks, policy uncertainty, and a sharply weaker US dollar. From a technical perspective, gold has entered a parabolic move and is trading well above short-term moving averages, which raises the risk of volatility or pullbacks if sentiment shifts. As long as global uncertainty remains unresolved, the broader bullish structure still remains intact for gold. Lastly, let's have a look at the Australian dollar. The pair continued its strong rally, breaking above the key 70-cent level, supported by broad US dollar weakness and solid domestic fundamentals. Australian government bond yields, particularly the 3-year, have climbed to their highest level since November 2023, reflecting confidence in Australia's credit profile and a more hawkish RBA outlook. Economic data has also been supported, with the unemployment rate falling to a 7-month low, reinforcing the expectations around policy tightening. Attention now shifts towards the upcoming Australian inflation data, including the monthly CPI and revised quarterly measures. Momentum indicators remain strongly bullish, though the pair is clearly overbought, making near-term consolidation or corrections something to watch for. Immediate support sits around the 69-cent mark, with the recent high around 71.57 acting as the next upside resistance. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.